Wow, that's colorful. Oh, you're muted.
Thank you. You doing video tonight, by the way?
I didn't know I was. Am I?
If you want to.
No, that's okay.
I just thought finally I got the house to myself. I'm allowed to do video. I'm not stuck in my room somewhere.
Well, it looks like I'm in an abandoned house, so I don't want to video it because I have all the bookcases behind me are empty, and in fact, we have very little left in this place. So
that's good that you're doing it slowly, little by
yeah,
little.
A little bit.
So we have Clem and Freedom.
Yeah, we've
Very
got
Miles, Jess. We have a lot of people that typically don't come, I don't think.
Right. And then Tangleweb was asking how my Amazon butterflies. We'll know tomorrow. If after the low today, Amazon gained 10 points. If it will gain about 6 more tomorrow, then I'll be right in the middle of all of my put butterflies.
Oh, that's what you don't want.
I don't want to be in the middle.
Well, you want to be in the middle of the body. Oh, I thought you were like, you're going to be in the middle of the two butterflies. Okay.
No, in the middle of the body. Yeah. So, nice. And I bought 10 in one account and 10 in another account. So
nice. And for those of you that don't know, you can put those in an IRA.
Yeah. And they're both in IRAs. And then I have some calls, and then if Amazon will get about 20 something points tomorrow, they'll be okay. So,
with this market, you just never know what's going to happen.
You never know.
we have that earnings butterfly on INTC, and when the news came out, I was like, what's going on here? And it ends up not looking too bad. There we are. So
that's tomorrow too, right? Yeah. Okay.
This expires tomorrow.
Yeah.
So, it's one of those things where you just never know. And the nice thing is the butterflies are so cheap to put on, and the risk versus the reward is just unbelievable. And, part of what we wanted to talk about tonight was, we use a lot of tools to do our job. I mean, we are using the data, TradyTix data flow bots, and those bots are machine-driven information that is derived from all the order flow from the big institutions. And that's so important because for trend traders, right?
I'm sorry, I got to interrupt since you said we are on Zoom. I'm sorry, we're on YouTube.
Both?
Since we're on YouTube, this is not financial information. We're not financial advisors, nor do we know anybody who is. So let's just say right up front that this is for entertainment purposes and education only. And I am not providing the education. So that tells you why my role is. So
Jay, you're so funny. Thank you for that. You're always CYAing me.
That's trying to keep you out of jail.
Keep me out of jail. I think I have one. No, I don't have any get out of jail free cards. That's for sure. Those don't ever work. So what we were going to talk about today was that, we have all these tools, and like in our case, we're adding analyst channels, and people are probably thinking, what are those? Are those bots, or is that machine driven? And so I want to try to, I recently did a video the other day, and I had a ton of questions, a ton of emails that I was returning in regards to it. And it's really about like chart analysis, you looking at a chart versus you getting information from the bots like TradyTix. We use TradyTix. I love TradyTix. I think TradyTix is one of the easiest institutional flow data that there is to read. Very simple to use. But they're they're the same, but they're not the same. They are similar, but they're not, because the institutions are actually driving the market from one moment to the next. They are literally driving the market. In fact, they control the market. So if 96% of the entire money flow is actually institutions, we're not moving the market at all. And so that's why it's so important to be able to identify, like, what are the institutions doing? And then how do I create, now this is the other part of it, right? How do I create a trade that I can manage, that's inexpensive, and that is not going to cause me too much stress, right? Now, a lot of people, when they first get into trading, they're just doing calls and puts. And for those of you that are now gaining experience in calls and puts, you're recognizing that this is a difficult market for calls and puts, unless you're able to, number one, just hold on and not watch. And then number two, if you're able to have some sort of wave or thrust that's pushing that call or put into profit, because you really need that velocity. And I think that the good thing is because I repeat this information so much, and now that you guys are experiencing the live situation that's happening in the market, you are starting to recognize and feel confident with that information that I'm providing you. So recently, we have 4 chart analysis personnel that actually controls 3 of our channels, and they're doing input in our channels to create more information that could help you. They're looking at trades. They're looking at, they're creating our watch list. They're giving us triggers for our entries as well as our targets to get out. And as we look at that information, we say to ourselves, because now we have additional channels, like, how do we use that with what we have with TradyTix? And so that's what I wanted to talk about tonight. So when we've been making our trades, as an example, we've been looking like the INTC, just to name one. We looked at INTC because it was an earnings play, and we also saw a lot of order flow. In fact, there was $8 million of orders that I saw on TradyTix that went into INTC for the expiration of this Friday, and it was an in the money call. And so when I saw that, I thought, who knows what here, right? I know nothing about INTC. Somebody knows something to put $8 million into this order. So what we did is just created a butterfly, a very inexpensive butterfly, to end right in a couple days, because it's earnings season. And they end up, which is a surprise, by the way, comparably to the other companies, right? They end up doing well on their earnings, and aftermarket goes up 7%. So this is one way that you can use order flow to.
So somebody just did this $8 million just on a guess, right?
No, you do $50 on a guess. We're doing a $50 lotto on a guess. But yeah, the guy that's doing 8 million.
Yeah. He's been reading somebody's mail. Yeah.
He knows something, like somebody knows something. Right. Somebody just recently posted in our group something about, all these guys, and I say all these guys, all the top executives of Facebook and Amazon and all these other big market cap stocks. All the owners of these companies were selling stock this last, August or whatever. And everybody. And, you have to wonder, like, sometimes you just need to follow order flow. And it's as simple as that. But I guess the point being is, like, we didn't have a target price for this because they bought in the money calls. So as an example, if we were at $25 at the time that we got into this trade, the order flow showed that they were buying like a $23 call. And so, it's almost like they're parking their money in a spot. And so what ends up happening is now we have to make an estimation. And so how do we do that? Well, we just go into the trade tab, and you end up just looking at the date that you want to go to. You look right over here to the right, and you can see where it says what the expected move is for the earnings, as well as, for that time period. So if you had a job, you want to do a weekly income trade, as an example, you just look out 8 to 15 days out, see what the expected move is, but then you have to pick a direction, right? So how do we pick the direction? Are we flipping a coin? Or are we looking at order flow? Are we following someone that knows something about chart analysis and is assisting us with target prices and how that chart looks going forward? I hope so, because then you're just making a higher probability trade based on the totality, right? Based on the totality of the information that you've collected. Now you've said, I'm not just flipping a coin. I want to make some income 2 weeks out. The market makers in ThinkorSwim, they create the expected move plus or minus. Now I need to choose, is it going to be plus or is it going to be minus? And then now I'm going to use experts, people that I follow, whoever that might be, or if you're experienced enough, looking at a chart, looking at order flow and saying, oh, wow, there was an $8 million order and it was a positive order. It was a call, not a put. Can I use that as additional information to help me make a decision? And the answer is absolutely. And then as you look at charts, and you're looking at EMAs, is price above certain EMAs to give you a confident feeling about that. And so that's how then, right, we get the direction. So now we got the expected move, part of it. We're then getting a direction, part of it based on the information evidence that we're looking at, which is order flow as well as chart analysis. We've picked the direction and now we have the trade. So what am I going to do? Am I going to buy a call, a butterfly, a debit spread? And so now that decision comes. And I would suggest to you that this is where you expand your education, because the more education that you have with these different types of option plays, then allows you then to become a better trader with higher probabilities of success. So if you're working, as an example, then you need to know how to automate your program. You need to know how to use the tools that are in front of you on your platform to be able to create a stop loss so that you limit your risk. That's number one. Number two is if you don't like looking at the chart all the time, because that does kind of bother you, when you're looking at P&L versus chart analysis, if that bothers you, then you might want to take a different type of trade than a call or a put. You might want to take a debit spread or a credit spread or maybe a butterfly. And what all of those three items have in common is that they're just a combination of a call and a put together. That's all it is. Don't make it scary. It's not that difficult. And then that enables you not to have to worry about swings in the market, whether it be, like today as an example. And so what that does is, just allows you to become confident as a trader. And by the way, because I've been talking to people with roadblocks, because it has been a difficult couple of weeks with the volatility, those base hits are what keeps you consistent and keeps you confident. And don't let those base hits go to your head, where then all of a sudden you want to start to increase size and frequency. And the reason I say that is because the market is open every day, but it doesn't mean that it's a good market to trade in every day. You do not have to put on a trade every day. That's what's so nice about swing trades. You can make an overnight trade, make 30, 40% like we did with the other night with, what was that, Morrow and Coin, or you can put on an earnings butterfly where you're not so worried about the swings. Jay ended up actually putting a butterfly at the expected move above and a butterfly on the expected move below. And the reason he did that is because butterflies are so cheap. I mean, really, really cheap in comparison to a call or a put. You would be shocked. Fact, let's just look at something. When we take a, go ahead.
I say, how about 10 cents a piece?
Is that what you spent?
Well, yeah, I did.
On Amazon? Tell us about your trade right now.
Yeah. Well, I did a strangle. I looked at the expected move, or actually of what it's been. I watch it every day. Yeah. So I put and everybody that I had conversations with about Amazon was telling me how they expected Amazon to just blow out.
Oh, really?
And yeah, they it's going to crush earnings. It always does, all that sort of thing. Okay. And so
interesting.
It was trading around 115 to 117, and so I put my calls at 125 to 128, I think, or something like that. And I wound up spending, well, actually, or if you're going to look it up on the analyzer or no?
Oh, I'm sorry, I'm not sharing my screen. Oh,
no, all I see is just the.
Sorry about that, guys. I apologize.
Yeah, I can read you the upper, which is. Do
you want me to go into the trade tab?
Yeah, if you want to just do the analyzer,
right,
yeah, because I didn't analyze it, I just put it on. I did the 125, 127, and 129.
Okay, so your 125 is the pin?
Is yes.
On the high side, and how about your low side?
No, that the high side was 129.
And what's your pin? The pin being the middle strike.
The 127.
Okay, so you got 127, and then what's your other one?
125 is the bottom one, and we still don't see what you're doing.
Well, I'm actually looking at the trade tab. Do you see the trade tab?
I see the trade tab, but not. Yeah.
What did you want to show us? Go ahead. I'm sorry.
No, I didn't know how
you. I totally misunderstood you.
No, I didn't know how you analyze it. So that's what I was.
125 being on the high side. What's your low side? What's your low?
No, that 125 was the low.
On Amazon?
Yeah, 125 was the call. Oh, yeah, that was the call side. And now the put side was 103, 105, and 107.
Okay, so that's where you're going to be hitting is on the low side. That's what I meant. Was
right. Yeah, I'll be hitting on the low side.
I recognize you have two butterflies.
Right.
You have one on the high side.
Yeah.
You have one on the low side.
Right.
So this is your calls and this is your puts. And so what I was wondering was, what is your middle strike on the high side on your calls? The middle strike on the put side. And then I'm going to tell everybody how you can create your own trade just by knowing this information.
Okay. So the middle call, the middle call is 127.
On the high side. Okay.
Right. And on the low side, it's 105.
Perfect. So someone else with a theory, right, or thesis that wanted to create a trade, a strangle in this manner, could have took a 105 put, or what would the call be? The 127?
Right, correct.
Okay, so that's how you would change the thesis in your mind from a butterfly to just a regular straight call or put. So when you see that somewhere on, any type of service, or that somebody's doing a butterfly, all you need to know is what the pin is. And when someone says, what's the pin is the middle strike. So that middle strike is the target strike. And that target strike then would probably be your call or put that you would then be buying. And you could utilize those same strikes basically to create a debit spread or a credit spread as well. You could do a strangle with a debit spread on the top, debit spread on the bottom. And so these are just different ways that you can very inexpensively trade with little risk and high reward. So it looks like you're going to make some money on the one that's on the bottom.
I should, yeah. If it moves tomorrow morning like it did this after hours, then yes.
That's awesome, Jay.
Yeah, thank you. Traders asking expected move versus on the VX a large option order pin. Which would you take?
Okay, so let me understand the question.
Expected move versus a large option order pin. So I guess you're talking about the expected move on the trade tab, as opposed to the large option order that the put.
I think it's a great question because Jay, where did you get your pins from? Where did you get your pin targets?
Adding a few bucks to what I had watched it trade for in the past week.
So you never use the expected move here on the trade tab?
No, I did not.
And that would be the difference, trader, is that you could use the expected move here, which is basically, right, the market maker, their system of generating data to identify where could that stock possibly be based on earnings. Where could it possibly move? So let's take a look at that real time now, because we do have Amazon's report. And so they were expecting an $11. You can usually find it right up here where it's yellow for earnings, $11. So now at the time, before we close, let me mute so I can yell at my dog really quick. He doesn't understand. Plus he's deaf, so it's not going to help me any. So
I thought that was you being hoarse.
Sorry about that, guys. So of course.
So I only missed it by a buck then, because they were saying $11 and I picked 10. So.
Well, you are an expert, aren't we all, like technical analysis people, right? We're all looking at a chart and we're all trying to identify where's this baby going to land. So they said $11. We started. Let's see. At the end of the day, my candles are very small. Well, it was one of those price action days. It wasn't very good for that. So it looks like we were around 111. Well, hell, it's right here, 111 when we closed.
Right.
It said $11. Where are we at right now? So the lowest it went was 87, and
right.
now we're at 96.
So
a little over. So we'll see tomorrow. And your calls and puts don't expire until the end of tomorrow?
Correct.
Okay. So, there could be some movement there where it'll, pop you right up into your zone right there, and hopefully get you right in. And you're looking at 107. Is that what you said?
That's the no, 105 is the middle.
Oh, that's okay. So 105, that's not bad. I mean, it's right underneath your 21 on a 1 hour. I think it's great. I think you're going to make some money in that. And by the way, the misnomer is that what? If price has to be like pinned right in the middle. No, it doesn't. No, you make a lot of money with just the price being anywhere inside the wings, anywhere inside the body of the butterfly, you make money. So sometimes I'm actually preferring, because of that, because it's a higher probability trade, I'm actually preferring that over the credit and debit spreads these days. And so I just seem to really notice with our market conditions that we've had that they've been much more forgiving and much more inexpensive. So just something to take in consideration. So analysts, I have to tell you a funny story today. So one of the analysts, he made a comment today in our Discord. Let me show you this comment. It was kind of funny. And the other thing too is, I sometimes
You got to change your screen for us.
Thank you. Sorry, guys.
Sorry.
So, you know, a lot of commentary. I'm really liking, you know, this is not a bot. Some people think that because you have a channel in your Discord that it's a bot. This is not a bot. This is analysts that are sending, it says bot, but it's a webhook so that they could send the message out right away so that I don't have to take it from a text message and then, you know, type it into Discord. So it's, you know, very quick. So the funny part is, you know, us in our group, we're kind of like, you know, middle-aged. I would say that our crowd is kind of the middle-aged workers here.
Some of us.
Some of us. And so what, some of us. And so the funny thing is he said something about spy, and I was actually playing spy at the time. Here we go. And so what ended up happening is he gave this chart about spy, and he was talking about this breakout. And so he says, hey, you know, watching spy attempt a reversal out of this channel. If we see a strong breakout, we could see a retest of the high of the day. And so because I was looking at SPY at the same time, I, you know, typed in the same channel, hey, our bullseye indicator showing a 5-minute breakout of 381.44 with a stop loss breakdown below 380. So I like the fact that, you know, he showed you what the chart he was using, because that's so important. We're going to talk about that right now. But the funny thing was, as soon as I put this in there, I was like, because I'm not very tech savvy, I you know, DM'd him and I said, hey, this is cool that I can, like, you know, use the channel as well. It's not blocked for me. I can use the channel even though no one else can. And he goes, hey, your entry and stop loss were sick.
Okay.
Yeah, that's cool. So, you know, because you know, it's nice to have some older technical analysis people and
validation,
some newer technical analysis people, some younger, the younger generation meet eye to eye. And it just, you know, kind of was like, oh, cool. You know, I didn't even think about like who was on the other end of, you know, just an age thing. But so, but, you know, I had to like, you know, I'm still thinking about that. So my call out was sick. I'm just letting you know. That's a big thing. Okay. So he needs to get on. He needs to get on board with our bullseye indicators. What he needs to do. All right. So I was going to talk to you about 5-minute chart. Oh, this is so important. So let's go back to the charts. So you're taking trades, you're getting trades from somebody, you're getting a watch list, or, you know, it doesn't matter where you're getting your triggers from. If you're a newer trader, if you're not creating these trades on your own, you need to recognize, what are they looking at? Because as an example, if I'm giving a trade out to people, and that trade, let me hide these controls really quick. If I'm giving a trade out and I'm looking at a 1 hour chart and I'm giving a direction, and your pocketbook cannot handle a 1 hour candle, then you should not be following that trade. And so that's what's so important. So when you take a look, as an example, to a 5-minute candle, which is most newer traders are trading either a 1, 2, or 5-minute candle, you should know that as a trader right now, then you can follow someone else's advice that's using the same time chart. Because the problem is that if their risk level is larger, and they're using a larger period chart to give analysis and or trade advice, when the trade, one of the candles turns red, as an example, and is just in your mind, right? Your P&L is going down the toilet and you're stressing out and you want to get out. If you cannot handle that trade because it's going in that direction, it's because that other person has a 5-minute or a 10-minute or a 1-hour candle and can handle that reversal. So you need to keep that in mind when you look at a watch list and targets. Are you holding on for dear life, or are you just looking at the first target as a place to get out? If you have a small account and you are unable to hold for that period of time, then you need to look at the trigger as a place to get out. Get out right before you get there to get maximum profit. So I'm just curious if any of our traders have questions about this psychology of trading. I think a lot of people make a mistake and say, oh, I got into this trade, I was following so-and-so and he's such a great trader, or I thought he was such a great trader. He probably is a great trader. The problem is he's trading on a different chart and you're trading on a smaller time frame because your risk level is not as big as his or hers.
Since we have some new people on, there is a chat box down at the bottom. If you have some comments for Sandy or questions, then this is a good time to put that in, and then we'll get to your stuff in just a minute.
So I kind of hope, Jay, trying to make that in simplest terms, a lot of people get disengaged and unhappy with picks and intraday trades and stuff like that, because they go, well, shoot, it hit the first target and then it pulled way back. Well, if you can't handle that reversal, then you need to know that typically when a trigger is hit, it's automatic. Everyone knows, it's kind of like industry standard that as soon as a trigger is hit, it's going to pull back. And then if it has enough juice, it's going to go hit that second target. If you cannot handle that pullback, then you need to look at that trigger as that's a placeholder for you to get out. And please get out before, because remember, we all have the same psychology. And because we're all looking at the same type of support and resistance levels, same type of charts, what is that called, Jay? When, what is that called when, oh no, I hate when that happens. You're making it come true because we're all looking at the same thing in the same way. So
projection.
What's that?
Projection work.
Yeah, it's I'll think of it when I'm not trying. This is old lady brain right now. So what ends up happening is self-fulfilling prophecy. It's a self-fulfilling prophecy because we all know the levels. We all have the levels, everybody. This is not a secret. The levels that you're given on a watch list is not secret sauce. It's support and resistance. And so what ends up happening, because we all know this, the people that actually can read charts know this, what ends up happening is that because it's a self-fulfilling prophecy, there are institutions that are smart enough to recognize, because everyone knows this, including other institutions, that I'm going to set the target for a little below so that I can get out before everyone else gets out. Because if you're chasing price to get out, and I know you've been there, I don't even have to explain this because I know you've been there. If you're chasing to get out and that red candle starts, it'll lock you in to where you can't get out for a decent price, and you start losing all the profits that you originally made. And if that happens,
it froze up. Something has happened to your stream. Okay, guys, bear with us for a minute. We're having some technical issues. All right, Cindy is having some internet issues, so give us a minute here. And she says hold one, so she is logging back in. So while we're waiting, if you guys can hear me, can anyone just put something in the chat box about a trade that you made today or something you were following, so we can kind of get some ideas? Gary, we'll get to your question about internals when we get on.
Houston, we had a problem. I'm back.
Yeah, you're back. Good.
Yikes. That was terrible. So sorry.
Yeah. All right.
That was weird. Kind of weird.
Yeah.
I actually thought it was some sort of like virus or something. I wasn't quite sure what the heck happened. So let's see here.
While we're talking about the candles, Jess has a question. Said if you miss the initial trigger, as some of us might miss that a lot,
Yes.
but it passes the first target. Is that also a possible entry if there's a second target, or you just forget it?
No, and I think that's what's so great about a watch list. So when you have a watch list and you have a trigger, that trigger is good all day. So as an example, I believe it was NVIDIA today, did not have a negative trigger. It didn't have anything for a trigger that if it went down. But I noticed as we were reversing that it broke that top level that was indicated for the trigger to get into the position of a call. And so I just shorted it and got 20%, and so you can look at your target, you can look at your chart and utilize support and resistance levels to identify, where, go ahead.
Are you on NVIDIA now, or because we see SPX?
Oh, thank you. Let me show you. So if you have some sort of program on your computer using, can you see it?
Yeah, but that's not NVIDIA. That's something else.
Oh, I'm sorry. I'm a little flustered from the internet thing.
Wow.
I mean, it was just like a blackout.
Yeah.
All right. So what ends up happening when the trigger breaks, if you have some support and resistance on your chart, you can then identify, oh, look, it's coming into, it's breaking, it's breaking the trigger level. I'm going to get in and just write it to the next level. And that's exactly what you can do. The other thing too is that because that support and resistance trigger, you should know that you could use that throughout the day. So if you ended up, as an example, getting into a put here, and then you got out, and then it goes up past the entry point, and then breaks that trigger again, you can get right back into a put and go into another play.
Doubled in.
Yeah, and so I hope that helps you to understand that just because the trigger's been breached once already doesn't mean that you can't go in and out with the same target, especially if we're in a range day. It's
Does
weird.
that help, Jess? Let us know. And then while you were on sabbatical there, I was just asking if anybody else had trades. TangleWeb is in butterflies on Apple and Tesla.
Great.
And Tyra didn't trade today. And TangleWeb also says, what are the best practices for getting out of the butterflies with max profit on expiration day when you're in the money?
Okay, great question. So what you want to do is you want to stay in the butterfly as long as possible. So but you don't want to lose money from it, if the market starts to change on you and all of a sudden INTC, as an example for tomorrow, starts to take a dump, you need to identify, hey, look, should I take a little bit of profit here? Or should I go ahead and wait until I get to my break-even point? And then it was just a free trade and nothing ended up happening. So you can either exit here at your break-even point, or I always suggest, because see this purple line, which is your money line, your time and theta, that's going to rise tomorrow. And so you're going to want to actually have that rise as high as possible. The higher this rises, then the more money you make. However, if it starts to, starts breaching the thicker walls of your butterfly, then you're probably not going to make as much. And what you can do is tomorrow, especially when the volatility is going on, you'll be able then to kind of like move around and go, let me see. And remember that as this is moving up, this is what you can make from that butterfly. And this is the peak. This is the peak of your butterfly. As much as you can make off of this is $150. That's your max, the 150. So as this is moving up tomorrow with time, especially after lunch, I might add, then you'll be able to see, is it worth staying in if the market is moving? And you just need to, kind of keep an eye on the market and see what the direction is. Are we just basing and kind of choppy? That's like the best, right? For butterflies when you're in the center, is that it's just going to waste time away. And then, about 20 minutes before the close, you just close it out.
Yep. All right, that's good. Jess wants to know, what is the purple cloud behind your chart?
This one right here.
No, it was on your chart when you were.
Let's take a look.
Yeah, there in the right in there.
So this is volume profile. So this is basically, where orders, the heaviest orders were. So this is just volume profile, and you can see that it kind of creates. It's funny, when my computer came on, it just came on. I didn't restart it. So it's kind of glitchy, and I apologize for that. But so you could kind of see where support and resistance is. This is our pivot low right here. And what a shocker that it's right in this area where there's no other orders here, right? The shelf of the orders are right here. And look, this is where it's kind of crazy, right? That's, we have the tools here. So, let them help you. And then this area's got nothing, right? And then you have some other support here. And so that's how you can kind of look at volume profile and say, oh, okay, well, this little area right here is support. And this is also kind of a chop zone that it could be ranging in, right? Because this is where all the order flow is. See how that does that? That's so, that's so weird.
Peter G wants to know what the red and yellow and green lines are.
So in the volume profile, you get the low, the high, and point of control. So right now, the point of control is over here for INTC around the 2633 area. And then the high of volume profile is 2725, and the low is 2612. So what I did is I changed the color. I changed the color to recognize that this is more of a target and resistance, right? This is an area that I want to short. And I recognize that a lot of people look at the high line or the pre-market high and go, oh, I'm going to get in right here. And you don't want to have FOMO and get in. right at the top. You want to look at that line, that top line, as resistance. And so what ends up happening, that's exactly what it was today. We opened above it, we broke below it, it came right to it, and then it started to continue in a down fashion. And so that's volume high, and that is the low. And you can see where I changed it to green to help me to identify, hey, that's a good buying opportunity is here. Even though there's some order flow here, you could see that that is a good area to get in. Now, does that mean that if I get into a long call here and it starts to go against me, hey, I need to have a plan. What is my plan? Is it $25? Is it $50 per contract? Am I going to wait till it gets all the way over here? You need to know your plan beforehand, before you get in, so that you can exit. And of course, that's one indicator, right? And then the other thing too is like, let me just get on here really quick, if I could just do this. So you can see that from the get-go, even though we're at resistance, here's our pre-market, or excuse me, this is our pivot high, this green line here. It never makes it. And you can see the wave, how even though we open up slightly green here, that's it. It stays kind of below that zero line all the way down for the whole day. And so other indicators that you're using along with, some support and resistance levels should help you to identify the trends so that you're not, I guess, trading your P&L so much. But if you cannot stomach trading your P&L, then you need to recognize that those targets that are listed on any watch list that you get, those are targets for you to get out, and you need to plan your exit accordingly. Don't, if you want to hold, you might end up being a bag holder because you're going to look at your P&L and stress out.
Two questions. Jess wants to know, she said, that's cool. Is that just on TOS, the way the colors, the volume profile with the
you know
color?
What? I think this is a different version. I ended up one time back in the day calling ThinkorSwim, because ThinkorSwim has a terrible volume profile. I even made a video on how to program your volume profile so that it looks better. But I have several of them, and that's my problem over the years, is I keep collecting different indicators. So I am an indicator freak and love indicators. So what I'm going to do is I'll make a video on this specific indicator that I'm using right now because I do like it. And I will post a video for our subscribers in our channel so that you guys can have this one.
So Jess, it's not just for you now, it's for all of us. TangleWeb wants to know the point of control. Is it changed during the day, or is it fixed?
It does. It's ever moving. So just like order flow, right? Order flow is moving, and price, right? And by the way, order flow and price, let's real quickie on this. When a chart analysis person, when a trader is looking at candles and is able to read candles, they're actually able to read order flow within a candle, the way the candle's designed, the wick level, that kind of thing. Sorry that this is glitchy. And so what ends up happening is they're able to read order flow within the candle, and just knowing that then should allow you to identify that. What was this question? I'm sorry, I got sidetracked on the order flow.
Point of control, is it changed during the day?
Yes, and because order flow changes during the day, so does point of control. Absolutely.
Okay. And then Peter says, is this the same as the high value, low value area on the volume profile?
Yes, it is. The red is the high value, and the low is the low value for volume profile. I just changed the colors. You should be able to do that yourself as well.
All right. And then now Gavin asked, sorry, not Gavin. Give me a second here. It was Gary, I think. Yeah. He said, what are internals? Because you talk about those a lot, and can you explain those?
Yeah, so we have, if you haven't gone in our channel for our our toss indicators. If you have toss, we have an indicator called the mood indicator. And we actually have a couple breadth indicators that you can utilize to identify what the internals of the market are doing. And so that kind of helps you to gauge, right? It's helping you to gauge order flow, just like we look here and we could see that at the end of the day, there was 100% buying in INTC. That's how we look at that. That's order flow as well, this labeling tick system right here. So when you can actually see this for the entire NYSE, then you can identify, right? Who's winning out, the call buyers or the put buyers. And so we have a lot of indicators that can help you identify the internals of the market so that you're not so focused just on this one candle, but you can kind of see what the market's doing. And I think that kind of can help you determine if you want to get into a trade or not, especially if you're a scalper or an intraday or a futures trader. I think it helps you a lot.
All right. Does that help? Let us know. And then kind of on the same topic, TangleWeb says, do you mind talking about level 2? How to use it to tell if there are more buyers or sellers at key levels?
So I have to tell you that I don't use level 2. I'm not an expert at level 2.
I used level 2 until I met Sandy.
I didn't know that, Jay.
Yeah,
Tell us about it.
I used to look at level 2 just to see how many people were lined up to buy.
Okay.
And I found out after we had CCI and TTM, LRC,
Yep.
all that, it's just a distraction for me, because now I can watch the chart until I can see where the resistance is. I don't care how many people are waiting. I just want to sell, or buy, depending on what's going on. So, I mean, I know some people use it a lot, but now that I'm able to look at this indicators you just talked about, it's not. The numbers. I start watching the numbers, and I'm not paying. You can't look at all the lights in the cockpit. It just overwhelms me.
Right.
Because I'm not middle-aged.
Well, I think.
I mean, I know some people use it a lot, but now that I'm able to look at this indicators you just talked about, it's not. I don't the numbers. I start watching the numbers, and I'm not paying. You can't look at all the lights in the cockpit. It just overwhelms me.
Yeah.
Right.
Because I'm not middle-aged.
I think that there are so many indicators, right, that we have on our charts that it is overwhelming. And when you're looking at so many things, it's it can be overwhelming. I don't know how else to describe it. And so what I think that is, less is best. And if you can find, and that's why, and it might not be the bullseye, it might not be the wave, it could be something else that you're attracted to, your mind's eye, right? We're all attracted to different things. When you find something that works for you, keep it. But that's what we tried to do just for, the toughest thing for a lot of people were getting in, getting out with profit. And I think for newer traders, I think that's what we tried to do, is just identify that, so you could identify those base hits and gain the confidence, and then grow your knowledge with not only different strategies, but to identify that when someone else, is looking at a target, however, they're looking at a 15-minute chart, and you are only able with your risk level to handle a 5-minute, as an example, candle going down, then you're going to be bummed out, because it's going to get you out. And so all these little nuances of trading has to come into the play with your experience. And so that's why when you start getting a base hit, and then all of a sudden now you're starting to feel overconfident, and you're starting to take different types of trades or heavier size risk trades, then you get yourself in trouble and you're like, well, what did I, what am I doing differently? And so you want to continue taking those base hits until you actually expand some of the other skills that are involved in, reading charts and order flow and really obeying rules as far as targets are considered and stuff. So that's what I would suggest to people, since I've been talking about roadblocks a lot this week.
Well, I know you've been stressed out because of the technology challenges, but this has been a fun hour. This has been
good.
really, it went fast, and it's like sitting around with a cup of coffee and chatting and getting to talk about a lot of different things.
I know, with people who love trading.
Yeah, who think like we do. Before we leave, have you cut off subscribing to this new masterclass, or is this the last week for it?
This is the last week. I mean, we're actually, we wanted a small group, so we have our group. But I mean, for goodness sakes, if you're interested and you want to attend, we'll accept you.
All right, and this is butterflies, or
this is how to create everything that has to do with butterfly spreads and how they can be. The risk versus the reward is just incredible. And if you don't have this as a tool in your tool belt, then I think you might be missing out on a huge advantage, of an option strategy that could really help you in your trading, as well as the mental state, by the way. You can't, if you're thinking that you're just going to scalp every day and that's the way you're going to make your living, it's very, very difficult to do that. You really need certain market environments to be able to scalp and make the amount of money that you want to make to live on. And so a lot of people go into trading thinking that day trading and scalping is the way that they're going to do it, not recognizing that that's really the hardest way to earn an income, monthly, weekly, etc. And butterflies are probably the easiest.
Okay, now I promise that Peter G is not, we're not paying him, but the question was, he said, what are one or two trading strategies for earnings? You want to talk about butterflies and earnings?
Yes. Well, Peter G, we just talked about, we just put INTC on the other day. That wasn't an old trade or anything. Let me just see when we put that on.
Yeah, and that was for earnings.
It was, that was.
And that's what I did for Amazon, was because of earnings.
Yeah, so that's 1021. So 1021, we put on this trade that INTC, our pin, right? Whenever I say pin, that's the middle. Our middle strike was 28. And our wings are out here at 26 and around 30. And so this is what we came up with the expected move and with the order flow, remember? So we're looking at a chart, we're looking at earnings, and then we're also looking at that $8 million order flow of it being bullish. And then we decided on 28, and that's where we're at. So that was on 1021. So that wasn't that
was last Friday.
Okay, so 1 week. So that's when we put it on, and here we are. Yeah. And then when did you put yours on, Jay?
About the same time.
Okay. Yeah. The other thing that you can do is a straddle. So let's say that somebody's got earnings 1 or 8 days out as within that time period. You can take an out of the money call and an out of the money put. So if the expected move, as an example, is $3, you could go $3 and buy yourself a put here. And then you would go over here, go 1, 2, 3. And then you would buy your call here. And then, and what you're hoping for, right? What you're looking for is a greater than expected move. If this is the move, then we're looking for a greater than expected move. Because as that passes that threshold that they identified, then you start to make 2, 3, 4, 5, 6 times the money. And so that's what you're looking for.
So what is the risk reward there if you do a spread on the calls and then the spread on the puts? Because I know it limits your the amount of money you can lose, but how much does it limit the amount of money you can make?
Well, as an example, on a butterfly, you can make 15 times the amount of money that you put up,
Right.
15 times the amount of money reward. I mean, that's how butterflies work. That's why they're incredible. That's probably why you need to have authorization to do butterflies, even though they're relatively cheap to do. But they put you through the hoop of tier 2 authorization to do them, even though they're completely risk defined. So your bang for the buck is incredible on butterflies. So
Okay.
it's something to take into consideration.
Right. All right. Peter says he got it. Thank you. So
Peter,
thank you all for showing up.
Yeah, and I just really wanted to tell you, please use your analyze graph more. This is so helpful for visual learners. And we're all here in this education in our Discord to learn. So please, when you're putting something together, put it on your graph, use the theoretical calendar, and really start to visualize your trade. The more that you can visualize your trade, you can then strategize, use the tools that are available to you. Look at all the tools that we've talked about today. I mean, ThinkorSwim is telling us how much this stock is going to move in the next 8 days. It's going to be plus or minus $3. So how are we going to determine if it's going to be plus or minus? That's what we need to know. And where do we get that from? Order flow. And so if you have all these tools that are available to you, you can actually step by step create a high probability trade for yourself. And that's what we're here to do at Trading Made Simple. So if you don't know who we are, come check us out.
Thank you. Thank you all.
Because we kind of have some sick stuff. I'm just letting you know. Awesome.
Okay, thanks, Gavin. That was wonderful. And
all right, guys.
said a great session. And see you all in the chat box tomorrow.
Sounds great.
And tomorrow, this was Bring Your Dog to Discord Day.
Yeah. Speaking of which, he's on my ass. I need to go take him out. Guys, have a great night.
All right, bye-bye.
Bye-bye.